Good morning, this is Tim McGowan for the Finance News Network. US equities finished notably higher in Wednesday trading on the back of cooler July inflation print. Key inflation data showed a better than expected slowdown for rising prices. The headline consumer price index for July rose 8.5% year on year and was flat compared to June. Economists surveyed by Dow Jones were expecting a number at 8.7%. Overnight, the Dow Jones Industrial Average gained 1.63%, the S&P 500 gained 2.13%, while the Nasdaq rose 2.89%. Major tech stocks outpaced the broader market on Wednesday, with Facebook parent Meta rising 5.8% and Netflix gaining more than 6%. The Nasdaq has now moved out of bear market territory. Shares of Disney surged more than 5% after hours when the company reported earnings that beat Wall Street estimates on both the top and bottom lines, with strong spending at the theme parks. In addition, total subscriptions to Disney Plus rose to 152 million, higher than the forecast estimate of 147 million. Across the sectors overnight, defensive industries underperformed but still ended higher. Autos, semis, credit card, home builders, rail, asset managers, chemicals, banks, airlines were amongst the standouts. Headline-wise, Elon Musk sold another $7 billion of Tesla stock in case he is forced to buy Twitter. President Biden signed this week the CHIPS Act, kicking into gear one of the federal government's largest investments in American industrial capacity. The bipartisan law will provide $52 billion in subsidies to chip makers in the hopes that they'll build their massive foundries in the States rather than overseas, as well as pour funding into R&D of high-tech industries. Right on cue, Micron said it will spend $40 billion on chip-making factories in the US by 2030. Behind the strong overnight numbers is an easing in supply chain constraints. The average cost of taking a standard 40-foot metal box across the world's ocean is now down by 40% from its peak. Delivery times are easing across the globe, and the number of vessels queuing outside the port of LA has dropped 75% from the start of the year, despite the port recording its busiest June in a century. The Global Supply Chain Pressure Index, set up by the Fed Reserve Bank of New York, is down 57% in July from its peak. Of course, the trend may reflect weakening demand for goods, as high inflation, which was in part owing to the surge in the cost of shipping and materials over 2021, dents purchasing power of the consumer. Whilst the easing of supply constraints is a step in the right direction, in the background the road to pre-pandemic supply chain levels may take years to normalise. Either way, the battle between inflation and the purchasing demands of the global consumer is now a dominant factor that is playing out in the global supply chain. On the currency front, the US dollar index was down 1.1%, though off its worst levels. One Australian dollar has strengthened compared to the US dollar yesterday, buying 70.84 US cents. On the commodity front, iron ore futures are pointing to a flat start. Gold added 0.1%, silver was up 1.3%, copper rose 1.8%. Oil prices rose on Wednesday, rebounding from losses early in the session on a lift from encouraging figures on US gasoline demand, and a lower than expected US inflation figure drove investors into riskier assets. Oil gained 1.6% to 91.93 cents US a barrel. On the corporate earnings front today, we expect reports from AMP, Mirvac, QBE and Telstra, and on SPI futures this morning are pointing to a 1% gain. This is Tim McGowan for the Finance News Network. Have a great day.